So let's move into the body of the computation. We'll take it sort of step by step. Hopefully you can see that okay. You'll see in the first instance really exactly what I've said on the right-hand side of the page. We have a non-savings column with a pound sign. Note that we're taking this as long form. Savings pound sign, dividends pound sign, and indeed a total. And you'll recall that our first job is very simply to populate the computation based on the 4 areas of income above. And to be honest, it's actually quite straightforward with this question. We see that the trading income is simply non-savings. Well, it would be. This person, Kate, is carrying out a trade. It's certainly not income from savings of any kind. Outside of that, we see a small amount of employment income, 8,000. So these 2 items are pretty easy to slot in. And note that in terms of the broad marking scheme within the ACCA TX exam, depending upon where this question placed itself, more often than not, each number, correct number, in the correct place tends to score about half a mark. If it's a more significant area, then it may well be a full mark, okay? So we're picking up marks for doing very, very little, except in a sense, sort of painting by numbers, filling in the blanks, yeah? So item number 1 and number 2 are in, and we note that we take the amounts over to the total column. Now, you don't have to use a total column. Again, this depends on your level of knowledge and, if you will, your confidence. It can be helpful sometimes just as a double check down at the end. It's certainly up to you, okay? Now, in relation to the interest, we recall up top it said bank deposit interest, amount received. Now, were they trying to hoodwink us there? Were they trying to get us to gross it up? Well, I'm not so sure. But the bottom line is that where an individual in the UK has bank deposit interest received in the 2022-23 year, it is simply received from the bank without any deduction of any kind. So in effect, it is received gross, and it is savings income. Therefore, we're going to simply slot it into the second column, or the savings column. So that deals with our third form of income. We now move on to dividends. Again, you remember up top that it said amount received. Now, it used to be the case that dividends were received under a notional deduction of 10%, but no more. So again, with dividends, perhaps this was a red herring or designed to trick us, but it didn't. We're putting or slotting the dividends simply in to the third column and indeed into the total column. So there you have it. We have 4 forms of income across 3 columns and indeed totaled. We're going to get a number of very, very easy marks simply for doing that. Now, you'll note that once we get to the total income figure, note that we actually total each of the columns. So our first total is going to be a total for non-savings, for savings, for dividend, and indeed for the total column, as it were. Okay? So we have 46,357 and indeed 56,500. We should cast this to make sure it's accurate, okay? It's very, very easy in the heat of the moment, stress of the exam, you're tired, you worked out, this exam is important to you. It's very, very easy to make arithmetic mistakes, okay? Now note that if we had done, note within the ACCA marking scheme, if we had made an error, perhaps we had said, 45,000 here as opposed to 46,000, we don't get double penalized down the page, okay? We don't get penalized again, as it were, for an arithmetic error. We've just got the figures wrong, okay? So we now have a total column. We see here that there is a deduction for reliefs qualifying interest. Now, here's an interesting thing. When we read this, maybe we were sure about it, maybe we weren't. But the bottom line is, where we have an item that's shown as being paid out with that word beside it, qualifying, it stands to reason that it will be a deduction. And sometimes within tax exams, and indeed within income tax computations, we need to guess. Remember that in terms of calculating the income tax payable, it's the examiner's job to stop you and to get you to perhaps ponder in certain areas. In other words, to dwell on things, to waste time. Now, admittedly, this question is very basic, so there's not too many tricks in here. There's not too many complicated areas. But as the questions get more comprehensive, yeah, and more tricky, you may find yourself dwelling on something to get to this figure. Don't do that. As I've said earlier on, and indeed in the course intro, this whole area of the perfection trap is something that you need to be very careful about, particularly in long form. You know, make a decision. Now, when I saw this, I wasn't sure, let's say, but I've made a decision, and I'm simply going to deduct this item, you know, before I get to the personal allowance. I'll just assume that it's qualifying, that there's got to be a deduction in some way, shape, or form, and note that it is deducted from non-savings income first. If we had no non-savings, we would go to the right, and indeed deducted from the total column as well. So we're now down into what we would refer to as net income, 4535, 7,000, and 55,500 as the total. Now, we should know that when we get to net income, what is deductible is basically the personal allowance. Now, we should also know that the ACCA TX examiner likes to play tricks in this area. In other words, you know, items that perhaps impact upon the personal allowance or the level of the personal allowance. Now, I'm just going to flag that with you now, and I wonder, do you remember from your studies? Yeah, what is it that could affect this? And perhaps, is it relevant to Kate? You know, is it simply that we deduct the personal allowance as it stands for the 22-23 year, or is this a mistake? Okay, well, the bottom line is it appears to me that if this is the model solution and the full value of the personal allowance has been deducted, then we're good to go. It doesn't seem like in this particular question that there are any shenanigans, any messing around in relation to the deduction of the full personal allowance for Kate for this 2022-2023 tax year. You'll also note that the personal allowance is deducted directly from non-savings income because it's sizable. Our final column here is taxable income. And we'll see across the board that we have taxable income in total of 42,930, split into three main parts. Now, you recall when I talked about the breakdown of an income tax computation that there are four main parts. We've dealt with number one quite easily, and here we've dealt with number two. In other words, any deductions from total income. In this particular case, maybe we guessed on the qualifying interest, but it did say qualifying. We certainly remember that there is a personal allowance, and we didn't notice anything iffy in terms of the relevance of deducting it in full or perhaps adjusting it in some way, shape, or form. So we've now, with parts one here, and indeed part two, got down to the figure that we need, taxable income. Now I'm going to highlight this line here because this is important. As we get into part three, which is the application of the various rates. Now let's remember there's a lot of work to do in part three. In my experience of marking ACCA TX tax questions and indeed mock exams over many, many years, it's the next area, i.e. part three, where students make most of their mistakes. Okay, I think we'll see as we come into part three as to why, but my advice is not, don't make any mistakes. My advice when we get into part three of any income tax computation is to slow down. Because I think when we work at pace, when we're trying to work quickly, those ones of mistakes tend to pop in. I think we can work fairly quickly up to this point. It's really in the next section, I would say slow things down, be careful, because here's where the dangers are. Here's where we have a pretty good chance of losing some marks, perhaps that we don't even need to lose. Okay, so let's move down the page here. We see, yeah, the working. Now, a couple of points in relation to what's happening here. Up top in the comp, yeah, we laid out our columns, and indeed, we really totaled as we went, yeah, for each of the three columns, and indeed the total column. So we know that part 3, as mentioned, is all about the application of the relevant percentages across the three main forms of income. And I think the problem for students is that there's lots of fiddliness here. There's different rates, there's bands, there's a variety of different things. So if you're in a position where you're doing income tax computations and you find yourself making mistakes, literally in every question, don't worry about that. This is totally normal. There is a lot of work to do here. And indeed, we haven't looked at the notes down below yet. Okay? The most important thing, as I've said previously, is to make sure you get the easy marks, the basic marks. So, in this first question for Kate, as mentioned from the off, we're taking things fairly slowly. If it's too slow for you, my apologies, you could push forward into the more complex income tax questions that follow. But for me, getting the basic right is important here. So what we see here in the first line is that we have a working, okay? Now, the writer of this particular question has chosen to do the working here. You didn't have to, but it's perfectly fine to do it. And it says here that we have working 1, revised BRB limit, basic rate band limit, 40,200. Now, if you look down the page, yeah, you'll see that this reference to the working is shown here. Okay, now I'm going to deal with this first. Now, we know from our studies, okay, that the basic rate band referred to is a band that 20% income tax applies to. Okay, so it suggests here that within working 1, the basic rate band is extended by the gross amount of the gift aid payment. Now, you remember when we looked at the question, we said, oh, Kate is in a situation where she's paid out quite a significant amount of money for charitable purposes. It's known as gift aid. So it looks to me as if the benefit to making a gift aid payment is, in fact, that the basic rate band is extended. Yeah? Now, I'm going to explain that in slightly different terms now in case you don't get it. Here we have the normal basic rate band. Here we have the amount, really, that is subject to the basic rate. In this case, we're looking at the non-savings income, so it would be 20%. We see that what they're doing is adding to the standard basic rate band the gift aid amount, which is 2,000, and indeed they are grossing it up. Now, I'm wondering why they're using the fraction 100 over 80. Because what they're saying, in effect, is for this individual, the tax relief is, in effect, given at source at the basic rate. So when Kate pays out a gift aid payment, one of the other benefits to her is that, in effect, the amount is gross, but she only pays net. So she pays under deduction of 20%. That is why within her income tax computation, it is grossed up and added to the basic rate band. So what has been the impact of making this charitable payment for Kate? Well, it's sort of been twofold. In the first instant, when she made the payment, in effect, she made a payment of 2,500, but only had to physically pay out 2,000. The other side of it is the relevance of grossing it up and adding to her basic rate band. Because if the basic rate band is increasing from the normal band with 2,500 on top to the new band, this means that more of Kate's income is being taxed at 20% as opposed to a higher rate. That is a benefit. This is good news for Kate. She's having more income taxed at 20, as opposed to a higher rate, let's say 40. So in terms of looking up at this section here, it says revised B/B limit 40,200 as shown. So in other words, this is the total amount across the board in all forms of income that is relevant to the basic rate percentage. Okay? Now let's deal with the first line. We'll recall from the top of the comp here, that we saw that under the non-savings banner or column, the total taxable non-savings income was 32,430. So if we move back down the page here, you'll see that because 32,430 is within the revised basic rate band limit, we know that all of it can be taxed at 20%. We're absolutely covered in this amount, and we have more basic rate band left over. So if we're taking all of the non-savings income at 20%, we're getting the tax figure of 6,486, and that is all of the non-savings income taxed. Now, if we look down the page here, here's where it gets slightly more complicated, and I have several points to make in relation to this. Really, excuse me. When we get to the second column for savings income, and indeed the third column for dividends income, this is really one of the reasons that I've said, well, we need to slow down, because there's a number of little sort of fiddly little rules that are relevant here, depending upon the level of income across the board. You'll see that the first reference here is that there is a 0% starting rate for savings income. In other words, there is an amount that will be taxed at 0%, subject to other variables. Now, one of the key variables, or the key variable, if you will, is that non-savings taxable income cannot exceed 5,000. Now, we saw from our first line, our first calculation, that non-savings taxable income was well in excess of 5,000. In other words, it was 32,000. So the point here is that this 0% starting rate for savings income, second column, isn't relevant because of the size of the non-savings income. Okay? So that's point number one to note. And you'll see that here, in this second note, as it were, well, first note, second line, you'll see that what they've done is they've put in note 1, as we've just read, and you'll see what's relevant is that 500 at 0% equals 0. Okay? Now, the issue here is, and it's a little bit confusing, this, is that certainly, albeit for the fact that the income or the 0% starting rate isn't relevant, it does use up the basic rate band. In our case, the basic rate extended band. Now, this is referenced in the next slide. Excuse me for coughing. It says here that she is a higher rate taxpayer, so has a 500 nil rate band. Okay, the savings rate nil rate band counts towards the basic rate band limit. Okay, so in this particular case, what we're seeing is, that we get a certain amount, of the savings income relevant to a lower rate. Now, I'll go up top in the computation in a moment, but you may recall that the savings income was 3,500. So there's the upside here is that the first 500 is going to be at 0%, and indeed the next amount, 3,000 in this case, is going to be at 20%. I'll just show you that so that you can remember. We dealt with the non-savings. We had 3,500 to be taxed. As we come down here, we see very clearly that the 500 is applied at 0, and then the balance at 20%, giving us 600. Now note that the basic rate band, if we did a calculation so far of what has been used up, we'd be looking at the 32,430, the 500, and indeed the 3,000. So we're using it up fairly quickly, but we haven't finished yet. There's still some left. Now, moving on from the non-savings income, the savings income that we've dealt with, a little bit tricky. The dividend income, we see that note 2 is relevant here. And what we'll see with dividends is that the application of rates to dividends is slightly less complicated. Well, at least in the first instance. You'll see in terms of note 2, very first sentence, is that the dividend nil rate band of 2,000, no matter what the other income of the taxpayer is. And it also counts towards the basic rate band limit. So in effect, unlike above where we were dealing with savings income, we get up to 2,000 at a nil rate regardless of the taxpayer's other income. For me, that makes things quite easy to deal with. So let's see that in play. Yeah, if we look up top, what we'll see here is dividends, note 2, 2,000 at 0%. Now remember, this is across the board, regardless of the individual circumstance, regardless of any other income. So in one sense, when we look at the calculations so far, lines 1 to 4, the messy bits or the tricky bits, are invariably in the savings area, not so much in the non-savings, line 1, or indeed in the dividends. So we have 2,000 at 0% giving 0. Outside of that, we know from the computation above that there is more income over and above 2,000. We've got an extra 5,000 worth of dividend income. So it looks to me when we're looking at this computation, we're thinking, okay, well, I know that 2,000 is going to be at 0. I'm wondering what the balance of 5,000, how will that be taxed? Now remember, one beautiful thing about tax exams is that we have our tax tables. And our tax tables supply us with all of this rate information. So if in doubt, refer to your tax tables. And remember, in this area of the comp, part 3, we are taking our time, whether or not it's an OT question or indeed a long form question. Okay, so I've dealt with line number 4. I've got my 2,000 at 0, some easy marks scored there. But I also have an extra 5,000 to tax. So what do? Well, let's remember about this basic rate band. If we calculate as we go, we'll see that we're getting towards the full value. And the full value would in effect be taken up because the balance up to this point, up to line 4, is really 2270. And this 8.75, as we'll see from our tax tables, is basically the basic rate charge or the basic rate percentage where dividends fall into the basic rate band. Now, let's remember that the basic rate band was extended. Why was it extended? For the gift aid contribution. Remember, it was grossed up. So this isn't the normal basic rate band. We had 2,500 added to it. So this is what gives us the opportunity to have more income, in this case dividend income, taxed at a lower rate. We're taxing at 8.5% rather than the higher rate. And that gives us 198. Okay? So we're now 5 lines in. And you'll note that we've had to do quite a lot of work here to get these marks, unlike up top in parts 1 and 2. What are we left to do? Well, it seems to me that if we were to add up these various figures here, we will get to 40,200. This must mean that the basic rate band in full has been taken up. Where do we go from there? Well, we go into the next rate up, the higher rate. And the higher rate for dividends, we know, is going to be 33.75. So this is the balance of the 5,000. If we add this and this, we know we've got 5,000. That has to be taxed at the next rate up, which is 33.75. And that's what gives us 921. So leading to 1, 2, 3, 4, 5, 6, we get to the income tax payable figure. Now I'm going to slow down a little bit just now, just to recap. Again, if I'm going a little bit too slow for you, my apologies, but I want to hone in the basics. What have we seen so far? And we haven't finished the question. We've seen a scenario with multiple forms of income. We've seen some payments or paid out items. We've been told that we need to calculate the income tax payable figure. So what have we done? We've really analyzed the information. We've set up our 3 columns above. We've populated part 1. We've then dealt with any deductions that we see are relevant in part 2. We've then come down into part 3 of the computation, where I have said, slow down. This is where the mistakes are going to take place. Okay? We've applied to the various forms of taxable income the various rates. And it was a little bit tricky here and there, particularly in the savings area. But we've made it. We've got down to an income tax liability figure. But we're not finished, because the question asked for income tax payable. What do we need to do? We must deduct any tax credits. And as I said to you earlier on, these tax credits can come in a couple of different forms. More often than not, at ACCA TX level, it'll be the PAYE deducted on the monthly base, cumulative over the 12 months for the individual, in this case, Kate. So we saw that 505 was deducted. So this is the total liability, the total exposure to UK tax in the 2022-2023 tax year. But what is actually payable by Kate after the end of the tax year? Well, anything that remains unpaid. This is what she's paid during the tax year. Therefore, that is what is due after the tax year, $7,700. So, in essence, when we look at all the various parts of this particular income tax payable calculation, we really see a computation that has 4 parts. Part 1, income. Part 2, any deductions, including PAYE. Part 3, application of percentages across each form of taxable income. And indeed, Part 4, the relevance of tax credits or not. Outside of that, we see a working, in this case, a simple working that related to gift aid. And note that this area here of notes, this is for tutorial purposes. We would not need this in a question. We don't need to explain to the marker what we're doing. So in actual fact, for a student, the answer would cut off here. Do read the notes. They're important. I've tried to explain them as best I can. Do rewatch the video if any particular area hasn't made sense to you. So there we have it. We saw in the first instance a reasonably straightforward question that could be part of, let's say, an OT style question. That's for sure. I've seen OT style questions that were not dissimilar to this, multiple forms of income, etc. And indeed, in section B, our case study styles. Absolutely. Okay. So, income tax payable. We know what we did. We took it nice and easy, and we watched out for the typical tricks that the examiner tends to play. Can you recall what they were here, or the things that we were a little bit concerned about? Well, in the first instance, the deductions, making sure that we put them in as payments and grossing them up is relevant. Outside of that, certainly with the income, it said amounts received for bank interest and indeed for dividend. Did we need to gross it up? No, we don't. These amounts are always received gross. Yeah, didn't used to be the case, both for bank deposit interest and dividends, but now they are received gross. So nothing fishy in the first 4 lines, nothing overly fishy here, apart from, let's say, the grossing up of the gift aid payment. We watched out for the PAYE. We knew we had to flag that to make sure we deducted it in the income tax computation. And final point, we know that when we get to part 3 of the income tax computation, that we slow down. That's where the mistakes are going to take place. Absolutely and categorically. Okay? So that's our first question, Kate. I hope that that wasn't too slow or indeed too quick for you and that it made sense. Let's have a look into a fairly similar question for our next taxpayer.